All right, hello everyone. Welcome back to the rationalinvestor.com's daily brief recap. With about 10-15 minute overview of what we sort of covered in the daily brief hour-long session this morning. So we'll start off. I've got a new assistant here, the mayor of New Mexico. Can we say that? Anyway, Kevin's here to help me. So if you do hear a bling after a couple minutes in the background, that's Kevin politely telling me we got to keep moving on. So where do we begin our story? And a lot of this is probably going to sound very redundant. That's what ends up happening with a lot of these daily recaps. It is one reason why the talking heads, of course, constantly have to come up with new reasons why markets are doing things. But I think on balance, we had a pretty good session here today. Lots of really cool stuff to look at. So first and foremost, we talked at length through the week about the potential inverted empire coming in on the US dollar index. The fact that the US dollar index just keeps making new highs really in itself should be a bit of a tell, right? No M's in sight here. The inverted, actually it's not inverted, it's a regular empire. It did not fire here, right? This weekly candle had to go through these lows for it to fire, so it did not fire. And as we've said repeatedly through this week, market jumped on the right on the open on poor econs around the world and civil unrest in other parts of the world, and has worked its way higher. We looked at a bunch of econs coming out of the States, and actually some of them were pretty positive. University of Michigan Consumer Sentiment Survey came in okay, hasn't broken down. Interesting cross data, housing starts and housing permits. And then I suppose to sort of backstop it, Canadian data actually coming in very, very strong. So you just heard a bling. That means I have to keep moving on. So we'll just simply finish this with, we talked before about if we're going to watch for levels on the US dollar index. Probably best to be watching for this 98.57 candle body highs in through the coming week, but you can see this week has all been about US dollar strength. I suppose on that same vein, if we pop on over to the gold market, as a classic fear proxy, gold bonds and yen have all been sort of moving in conjunction. Do I have that? Oh, I got rid of it. But anyway, we through the daily brief, we looked at all of the fear proxies. They all seem to be moving in conjunction. The question I've had recently is, has Bitcoin itself disconnected from that fear story? We'll talk a little bit more about that in a bit. But the long and short of it, yesterday we had pointed out that we were in a reload zone, that we were carving out this massive diamond pattern. Still don't really think we can draw any major conclusions about the gold market until this diamond actually resolves itself. As well, too, we looked at energy prices and trending lower right across the board. Had a build in crude stocks on Wednesday. Did see a bit of a drawdown in unleaded, but even in the face of that drawdown, unleaded is working an M top right now. So, I've made the thesis all along that gold and oil and energy can't really move in the same direction simultaneously. I don't see any cause for us to be thinking about rip-roaring bull markets in crude or energy right now. So that to me doesn't mean that gold's going to fall out of bed. But I think, if anything, probably a really good analogy of range trade. We kind of just saw this on Bitcoin recently, where it rallies up into reload short zones and then ultimately fails and works its way lower. I would still argue that we are range bound for all those range traders, shorting up at the top end of the range, buying at the bottom end of the range. And that would also sort of validate that sort of diamond thesis if we pulled back into this reload zone and then worked our way back up to this apex. So jury's still out on gold. Really no justification to be a buyer up here at all. But at the same time, too, probably a little too early to be a seller. Moving on, stock market. We had, of course, Julian's baby powder report yesterday. We took a look at the options open interest, and there's a massive open interest on the S&P puts. Keep in mind, this is the third Friday of the month. Third Friday means the big monthly expiry for options. 120,000 contracts on the SPY, the S&P 500 depository receipts, at this 290 strike. If they can somehow get the market up just a hair, even a penny above that 290 level. In fact, the auto exercise on these options is a nickel in the money. So if they can get this thing above 289.95, then Wall Street hits an absolute home run. Interestingly enough, even at these levels, if we looked at what the average right price of this option is, even now it's trading at $1.50, with like today being the expiry. My hunch is that if they can get the market out anywhere near here, if they can get it out just above, great, home run. Even though the market settles out maybe like 289.50 or whatever, I still think Wall Street hits a home run. But it makes a lot of sense why we're seeing the stock market rally here today. Of course, if you read the sort of, the news rags through the week, this has been an absolutely just train wreck week for stocks, with lots of FU moves. There's a nice little FU move against the top. There was some FU moves against the bottom. But I had made reference recently that candle body lows, just such a fantastic trade location. And once again, that seems to have proved to be the case. Beautiful candle body low there, candle body low there. And of course, if you were a trader and had the kahunas to step in against that level, you're getting paid here today. Way to go. This might actually create a Joby gap scenario. This is a half decent looking little doji. If we close out here and then tick up through that high first thing Monday morning, that's a Joby gap continuation trade, and it's projecting probably somewhere up in this area. What's interesting is we have had some people on the site talking about cycle analysis, and I actually think we had a couple reference dates to work with, which gave us sort of a nice little sort of guide to build these cycles. You notice at the midpoint of the cycle, pivot low, rally into market top, pivot highs, and they produced some pretty darn good trades here, and pretty accurate too. So, here we are, the midpoint of the cycle. I should be looking for some sort of bullish pivot here, looking for a rally into this market top cycle peak sometime mid to late September. So believe it or not, I actually think that, given that Mr. Trump's presidency is all about volatility, Wall Street's having an absolute field day. They got everybody and their brother panicking, thinking down. The irony of it all, of course, is reload zones, all that kind of conversation, candle body lows. This was nothing more than a little buy window. And could we set up for a nice move to new highs here into late summer, early September? Ironically enough, that actually isn't too far-fetched. Moving on, and actually I think I missed a bleep there, so I'm really behind now. But continuing on our little story here today, where are we here? Here's an idea, and I like full disclosure, showing you ideas that failed. Here was a bot setup that we talked about. I don't know whether we talked in the public, but, site people would be familiar with this. We were wondering whether, trendline breaks, whether General Electric might be bucking the overall trend and trying to turn back to the bull side. You can see the bot entry level. I'll tell you, after looking at this on further inspection, I'm not overly impressed with this bot, but nonetheless, had you taken this 25 level and used these three lows to risk against, if this trade had worked, our target would have been $13, but here you can see clearly we never even did get move stop to scratch level hit. Boom, the market fell apart. And then yesterday, somebody came out, a whistleblower from the Enron days, saying that looks like GE's cooking the books. There's a lot of sort of reaction, and like an insider came in and bought just a ton of stock yesterday on GE. But I would just simply argue that this bot setup failed, and here's just an example where the bot didn't work. And you just got to walk away at scratch. Just simple as that. Next bus, 10 minutes. Try and, predefine your risk on a trade. And if the trade idea doesn't work, don't take it personally. It's just, it's just market behavior. try and keep a close eye on risk, and when these levels are broken, and in this case you can see they actually gave the botters the opportunity to hop off there, even just avoiding this whole gap situation entirely. Moving on. Pop on over to crypto to finish off today's offering. We did yesterday in the public broadcast talk to a little bit about sentiment indicators. Keep in mind, I follow a lot of indexes and sentiment indicators. We gave you a little introduction to the OKCoin forward spreads. You can see Bitcoin trying desperately to hold on to that parity level we talked about yesterday, even put in a little bit of a W. What I did notice out of Bitcoin, which was really cool, of course, algos fired, came into 2-to-1 levels, and then formed inverted empires. Inverted empires fired, which technically means it's a bullish sign. So, hopping off on this trade entirely, I think is probably the smart thing to do. And then lo and behold, we've come in and now put in a W just above Mountain Man level here. And you can even see now, as we speak, we're moving higher. Algo right now, this is way too soon for me to be thinking bull trade. And actually very much like we just saw on the S&P 500. Let's see, where is that? I think that's over here somewhere. Where are you? You're around here somewhere. There we are. I had sort of talked about, and actually this is a really good example. These are the S&P futures. We had talked about the algo gave a bull signal here, but I was really worried about these candle body lows. And if I really wanted to place a trade, where should I be really concentrating on? As well, too, if we do things like reload zones, I don't think it should surprise anybody. I think that was a Mountain Man level. Yep, there's good old Mountain right there, 78.6. So, wow, what a trade level right in there. I think that was actually the trade. So, same sort of thing on Bitcoin, what I'm seeing right now. I don't even have an algo signal here, but I can't really justify going long on this W here if I have to risk all the way against these lows. So I'm thinking, and what I was talking about in the daily brief today, is I really do like the idea, maybe let's draw like reload zones as this thing works its way higher. If we do sort of calm down here and come back down into these candle body lows through the weekend time period, and you see any kind of sign of strength, that's actually not a bad risk reward. Looking for a 50% tag, and then of course if algo turns back bull through here, then I can join the trade on that. So interesting, this sort of moving along the heels of the back news. I noticed that Bitcoin was sort of moving in conjunction. Actually, I don't have the chart up, but Bitcoin was moving in conjunction with all the other fear assets, heading lower on the day: yen, bonds, gold. And then all of a sudden the back news came out and the market caught a bid. So I'm still on the fence about whether Bitcoin is actually in the fear asset camp or the greed asset camp. Anyway you shake it though, short trades played themselves out, and now it looks like we're working our way back up to 50% rolls, and also filling in this very noticeable MUOC on the profile here. The only thing I'll leave you with, unfortunately, Litecoin, Ethereum, not enjoying the same kind of bull. A little bit worried here. Of course, halving event rallies, halving events have happened. Bearish AB equals CDs have confirmed themselves, projecting targets down into here, and lo and behold, if we actually pull up a fib of the entire range, we notice that we have this cheeky little trend line off of these lows. The primary trend line, ironically enough, because these lows are almost exactly the same, is almost flat. This secondary trend line, I think that dominated the whole sort of halving event rally. With this lost now and AB equals CDs basically confirmed, I think we can actually make the argument that we might be playing against this trend line here, which happens to line up with that AB equals CD objective and horizontal support and resistance, the original weekly breakout and the original daily breakout. So believe it or not, I am looking for Litecoin in particular to actually work its way back down. Could we enjoy a little bit of a counter trend rally here? Sure. Wouldn't be out of the question, but this is going to be awfully tough. And if anything, I think this also sort of reiterates what the altcoin market in general looks like. And if you're an altcoin investor right now, there just isn't a heck of a lot to do. All of our indexes are still pointing lower. No signs of W. So for now, what I do see is maybe potential little range trades in Bitcoin, waiting for the algo to sort of set itself up for the next swing trade. And unfortunately, if you have coins on Poloniex, if you have coins on Trex, both of those exchanges are back on the delisting bandwagon again. And that sort of reiterates the fact that the altcoin market just doesn't have a bottom working yet. Okay, I think I went quite overboard there, but trying my best. I hope you guys got some good value out of today's presentation. All the best, and the only thing left for good old Brian to say at this point is a big bye for now.